Coming to you live from downtown Detroit, this is Benzinga's PreMarket Prep with your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day.
Good morning, traders and investors. Welcome to Tuesday's edition of Benzinga's PreMarket Prep, brought to you by Benzinga Pro. I am your co-host, Joel Elconin, working the controls all by my lonesome today, along with Dennis Dick, who's ready to recap the weekend action. We got so much to talk about today, we might be on here for 2 hours. We could talk about the short trading week. It's a holiday week coming up next weekend with the Jewish holidays. September, the worst month for the market. Since 1945, we've actually had an average decline. U.S. and Canada are back at the table. We got Friday, we got the jobs number. Trouble for JD.com. The founder returns to China after a sexual misconduct arrest. More competition for Tesla. Tropical storm Gordon moving on New Orleans. China week. Nike get using Colin Kaepernick. Holy moly, Dennis. There's so much news today. How you doing?
It's funny. We had no news last week, and we're scrambling around doing tickers. All the analysts were in their slumber. They're out of their slumber here this morning, and obviously we got just a ton of news. Hurricane affecting the markets here with oil trading up, and then you got the overall market getting whacked here this morning. There's still some Trump fears out here, and trade war fears, I should say. China stocks getting hit pretty hard here this morning, but pretty good. Joe, I don't want to ask you how your weekend was. I kind of know how it was. I watched the game. But, give us your thoughts here and how the weekend was.
The weekend was great. I went up to...
Besides the game.
I went to Soaring Eagle Hotel and Resort on Sunday night.
Nice.
Saw Russell Dickerson, Darius Rucker, and Lady A. That was on Sunday night.
You guys are big country fans, eh?
Yeah, all the way to Central Michigan University, where that's located. And then on yesterday, last night, down at Royal Oak Arts Beats and Eats, saw another country concert there. So we saw who warmed up? Dylan Schneider warmed up for Chris Jansen. So I had a great weekend. This is the only thing I'm going to say about Saturday. And I'm not sure if Jim Harbaugh listens to the Benzinga's PreMarket Prep. Okay. But we got to go to a no-huddle offense. Okay. We got to do something that was a totally predictable offense. Very disappointing. You come out of the second half, you get the ball and you get a delay a game. I mean, come on. Are you kidding me? Very predictable offense. What we have to do, we have to go to a no-huddle offense. So that's it. I'm disappointed, but it didn't cost me any coin. I didn't bet on it.
You didn't bet on it?
Hell
you bet on them all, don't you?
No way. Because the trend is to bet against Jim Harbaugh, to bet against Michigan. I don't know if they ended up being a favorite or laying points on the road or whatever. Absolutely ridiculous. But let's get into the markets. No one really cares about my weekend here. But let's talk about the SPOOs, Dennis.
Yeah.
We already have nearly a 20-point range. We had a strong close on Friday. And then I watched the market a little bit yesterday. We had a nice day. We got up to 21.12 and then 29.12. And then we came all the way down to 28.91.75. And that matches Friday's low and the weekly low. So that's a big number on the downside. What's the news? I don't know. September being the worst month. You also have the Jewish holidays next week, which is, traditionally buy Rosh Hashanah and sell Yom Kippur. Last year I wrote buy Rosh Hashanah, buy Yom Kippur. I'm not sure what I'm going to do this year. But just overall weakness. What are you seeing out there?
Very mixed. I mean, you're seeing a lot of stocks strong too, and this hurricane is actually impacting the stocks here this morning because you're seeing oil very strong here this morning, obviously on the fears of the hurricane. So the hurricane trade could come back into favor here today. Let's just maybe briefly talk about that here this morning. Obvious thing you're seeing this morning, which is right here in the pre-market, is USO and the oil trading up substantially here this morning. You were saying some rigs look like they're going to come offline.
Yeah, we got Tropical Storm Gordon heading towards New Orleans. We did see a quick note here that They're evacuating some of the rigs ahead of the hurricane. I mean, they have to do that for safety purposes. The thing about crude oil here is it just has no resistance. You cleared last week's high, and that's the way it's acting. There's nothing in the 71 handle, current high 71.40. But you want to do a few hurricane stocks to start the show?
Yeah, we can. We can jump into it. I mean, the number one hurricane stock we always talk about, this one is GNRC. It always seems to get a lift whenever you have hurricane worries, and it always is seasonal. I mean, obviously hurricanes are seasonal. This stock is seasonal too. The funny thing is, it often starts hurricane season, and it's obviously not performed well, and that hasn't been the case. GNRC is actually near a 52-week high. So it's starting strong already, and we've been up all year, even in the non-hurricane season. We kind of caught a lift. This is talking back in April and May. Now we're in hurricane season, and the chart actually looks okay. I mean, I just look at it on the chart here. It's near the highs. It showed some strength. It showed some life on Friday, which is interesting. It's funny how these things work. You start hearing, sniffles about, potential tropical storm. They start to buy this stock, and if you look at the trading action on Friday, GNRC was strong most of the day, closed fairly strong. Hasn't really traded here this morning, only 100 shares. I'd probably expect it to be higher here, though. I know the S&Ps are down, but I probably think this is going to be one that gets bought here, especially when you see oil responding. GNRC is usually one they think about, so I'd watch for some strength in this one. Just give us your quick technical take, GNRC, and then we'll talk some other stocks.
Okay, I mean, it's winding up here, right? Getting ready for a move. It started last year at a much lower level, and you got the pops with the hurricanes. Let's see. GNRC, I will pull that up here on my alternative chart, and let me see what I can come up with. Boy, oh boy. On the dailies here, you had a spike high. I'm not sure if that was on an upgrade or once at 56.64. So that's been the recent high, the move on August 1st. I mean, this is one you want to just keep, an eye on the tape and, see what the news is regarding the hurricane. Kind of a thinly traded stock here, trades 300,000-400,000 a day. But my big level on that one is 56.64. And then I want to bring up another stock here, Dennis, that during hurricane season that you were actually long, and it took a huge drop on the hurricane and
last year.
And
you're talking Aspen Insurance.
Yes, exactly. Tell us
and it's getting taken over, so it's not going to move today.
Oh, that's right. And,
AHL is going off the board. Announced just 4 days ago, but I would have said AHL would probably be a good short on something like this. Obviously not the case because it's getting taken over. But you automatically think long stocks like GNRC, maybe some of your construction companies, if it really gets ugly. I mean, last year we even saw Home Depots and Lowe's start to rally when the hurricane season got really ugly there for a while. In this case, reinsurers take it on the chin. What reinsurers do is they reinsure the insurer's risk. So these are the guys that take it. They're ground zero for paying out when there's bad storms. And AHL was always one that I would trade. Well, obviously I was long my investment portfolio and I got hit on it. It bounced back and I was like, I ain't owning these things anymore because in hurricane season they seem to get destroyed. And when they thought that hurricane last year, what was the name of it that was going to hit Miami? When it was like dead set, course for Miami. I can't remember which one that was, but then it took the other route, and we ended up going to hit our buddy Fari over on the west coast of Florida there, and I didn't come in Miami. And then obviously all the stocks rallied. But right before that, if you look at the chart of AHL and just bring it up, you can see just the annihilation that stock took back in September. It went from 45 to 35 in like 3 days. And I was like, really? This is a stock, that I had in my portfolio for a long time. It had a nice little dividend. It was doing well. And I was like, this thing can lose 30% in 3 days. And it bounced back after that. And I sold it. And I was like, out at, I think, 41 or 42. And it's a learning experience, too.
Actually, I think you sold it higher than that, Dennis, because if I remember the scenario quick, they knocked it down to 35. And they're like, oh, the storms aren't that bad. And the next morning, they jacked the thing up 12, 13 points or something.
It was. You got it all back in one day. And I was like, okay, no, I'm selling. And I think I actually sold AHL short, too. So I think I not even sold it out of my investment account and then sold it short. And then it came back in, too, because it just got silly. It didn't have Miami. And then they bought these things hand over fist, and they were buying them back up to levels that were higher before the hurricane season or even starting on some of these. So these things can really come into play. Now, again, AHL is not going to move. It's getting taken over. But there is going to be some reinsurers that could move. I don't know how bad this hurricane's going to be. They're speculating a little bit of badness, though, with obviously oil trading up the way it is. But a couple other ones that you might want to look at, RE. RE got hit hard last hurricane season. You can see the big candle there from 250 down to, this is in September, from 250 down to 209. R&R is another one, which is Renaissance Holdings. You can see the big candle back. And this is what, is a nice thing to look at charts, is just to see what did it do last hurricane season. And R&R in about a week went from 145 down to 120. So it got hit pretty good too. So these things really haven't had any movement here yet. I think today could be the first day where they show some pretty good weakness here, though. So RE, I like from the short side here, just short-term hurricane trade. And obviously, if it's not that bad, you got to watch it. You almost got to watch your weather reports because they can spike too. If they're not that bad and they start hitting these stocks down, and then all of a sudden they're not that bad, they will rally back hard. So you just got to be really careful. You almost got to the meteorologists probably should be trading these reinsurers more than we should, Joel. And there probably is a few of them out there doing it, but R&R and RE are a couple that you can trade. I used to trade PRE, but I believe it's off the board. We keep losing these things. They keep getting bought out or they keep doing reorgs, but there's a couple reinsurers for you to think about.
Okay, and then a couple of your traditional stocks, Home Depot, got a pop, people going to buy short-term supplies.
And those stocks are hot going into this.
I know. That's
so, like Lowe's has been really hot. Sometimes not, though, because the wind are in their sales. It's already got the momentum. You got shorts scrambling already on something like Lowe's. Not that there's a lot of shorts in Lowe's, but anybody who is shorting it, into the report, it's had the gap and go here. So I don't know necessarily. I think, you start seeing these things break out. These things could show some strength today. It's hard because we don't know how much damage is going to be here, and we don't know if it's going to hit, where it's going to hit. But what are they projecting it out to? Like what day?
I caught that this morning, and then I was on Stocks and Chalks. I didn't get to do a lot of research on it. The only thing I heard, it's given oil a boost as they evacuated some rigs, in the Gulf Coast. So that can't be good. I do not have the timing of the storm. Just from Spinner here, we're talking about why the S&Ps have lost some altitude here. He's keeping an eye on the DAX, and he says the DAX just got whacked really hard. And it was Hurricane Irma last year was the one that did the damage. That was the one that you're trying to think of.
Hurricane Irma.
All right, let's go to some more news.
What's the name of this hurricane, or it's not a hurricane
Gordon.
Yet? It's Gordon. Yeah. But is it an official hurricane yet, or it's still just a tropical storm?
I don't have the weather channel up right now.
You got to get the meteorologist on here.
Yeah. We'll get some updates on it. So let's go to some news here. And sure. Boy, oh boy, when you see some bad news on a stock, the first thing you do is you like to go and look at what the stock's been doing. And JD.com got some bad news over the weekend, and I'm just reporting the news here, not making any judgments. The founder returns to China after a sexual misconduct arrest. Now, I don't think he was actually charged with anything, but anyways, that's not good news for the stock. But the stock's been in the tank anyways. So, boy, oh boy. And Dennis, let's just go in. You said that China stocks were weak too. So why don't you put everything together here?
China's weak overall here this morning. You can even see, a great index. Just go look at the EEM. I mean, that's full of China. You can look at the FXI as well. A little bit bigger stocks, but it's trading down too. But you look at your Alibaba trading down 1%. Baidu slightly down here in the pre-market. Momo got a couple of upgrades. It's still trading in the red. But those were smaller brokerages that were upgrading that. But what's funny is you look at JD, and even when China stocks were really taking off, and if we go back into the summer when everybody had to own China, and that was the highs, JD was one of the slowest ones to respond. It finally started to go in June, but then it was one of the quickest to give it back there as well. Like there was a lot of stocks that doubled over the course of the summer. If you look at a stock like Momo, it went from $25 all the way up to over 50. There was just a lot, and obviously we talked a lot of their small ones, the IQs and the HUYAs. But during that that huge run in May and June. JD.com was a real laggard. It didn't do anything in May. It finally started to lift it like a rising tides lifts all ships in June, but then quickly gave it back. So this has kind of been the underperformer, I would say, of all the Chinese major stocks that are traded there. And here you are, you're sitting at the lows, you're down another point here. I mean, this is the dog of China here, at least right now. I don't know what turns it around, but it's through a lot of support levels here now too. I mean, this 33, 34 area, actually I'm looking wrong, the 35 area held for a long time. Finally breached that about 3 weeks ago, and it really hasn't really stopped going down since. Now you get more bad news. Is this the washout low? Maybe. Is there a potential, bottom here somewhere in place? Maybe, but go back to 2017, we ran from 25 to 35 in a hurry. In basically 4 months. So, there's a lot of green candles in there. So we always say what goes up quickly through an area can come down quickly through an area too. And it kind of looks like eventually this might want to test 25. So I look at this and I don't think I want to jump in here at $30, especially it's just been a stock that's just underperformed a lot of the other Chinese stocks.
And call it a coincidence or not, Dennis, but this thing hit 30.52 on Friday, which was the low of the move. That's the lowest level that it's been at since it made its all-time high in February at 50.68. It hit that on Friday. Trading down in the pre-market, we did trade under $30. So if you're looking for a bogey here, $29.85, that represents your pre-market low. And this stock, as I said, man, how far do you have to go back for the last time this was thing under $30?
Yeah.
So things aren't looking good here. When there's news, just be careful here. Let me give you, when's the last time we were under 30 here? Holy mackerel. Go back a long time. Go back to March of 2017 when you had a 29.88 low there in JD.com. All right.
I'm not trying to call the bottom on this one. I'll just say that. You know what? Me and Joel keep getting burned trying to call bottoms on stocks, and the trend is your friend. Sometimes just good to go with. This thing is weak, and when weak stocks, when you see the stock moving down over the course of the last few months, rallies are usually to be sold, and when you see the stocks that are running up and they're strong, then dips are to be bought. And I mean, I think rallies are still to be sold. And JD.com, guilty until proven innocent on this one.
Okay, now I know exactly. You gave me a great segue there. Let's just do a little Tesla talk here. And news over the weekend, more competition. Mercedes-Benz, not a big deal. Dennis, did you have some other news on Tesla too? Well,
Goldman reiterated their sell. Okay. They were already at sell, so they just kind of had a research report that was negative again. And their price target was on the lower 200. I am so torn on this. I put this in my long-term investment portfolio. I don't know why, because I've talked about this like 3-4 days. You can tell how I'm just not comfortable with this in my portfolio. And I'm down probably 2-3% on the position here right now. And I almost feel like just cutting the loss. And maybe it's just the investor, the CFA guy in me saying, "What are you doing? This thing is burning cash." And the Guggenheim analyst had talked me into it. And there was a 420 and potential. Did they have the money? Didn't they have the money? I talked myself into the investment. I wasn't convicted because I only bought a half position. I'm glad I didn't buy a full position there. And whenever I'm buying a half position, it usually feels like I'm usually just wrong. When I usually buy like a third or a half, I'm usually just wrong, aren't I? Because I did it on Micron too. It seems like when I'm not fully convicted, but I kind of get myself talked into it somehow. And I'm like, well, I don't know what to do. I kind of want to buy it. I kind of don't. Then I often put on a third position or a half position. And it seems like those always lose money. So I think, I need to learn from myself. And obviously, I've been trading for 20 years. I feel like I'm a pretty good trader. I don't know. I've been investing for a long time too. I feel like I do a decent job investing as well. But it's funny, just analyzing this by myself. When I'm only buying these third positions and half positions, I feel like I lose on those more than I make. So maybe I should just stop doing that and be convicted and buy, or be convicted and don't buy. But when you kind of just wishy-washy, what is that saying that Mr. Miyagi said to Daniel's son and the Karate Kid? What was it? He crossed the road. If you cross road, good. If you cross road. If you don't cross road, good. If you kind of cross road, that's not good.
Okay.
So you get squished. That was a bad tangent.
Spencer's not here. Okay, so you can't do your little movie thing. Okay.
You would have had.
Yeah.
Had me.
You need to No movie thing, but I'm sure someone in the chat knows that.
I want to sell Tesla is what I'm saying. I want to eat the loss.
Do it right now.
I'm down. I bought at 3. I'm down 20 points. So I'm down more than that. I'm down 20 points. I'm down like 7% in this thing. So I want to sell it. I want to eat the loss. What should I do, chat? Should I just get rid of this thing? The chat could be on this too. Make the call for me and my investment portfolio. I stuck it in there not to trade it, not to worry about. And I got talked into it by the Guggenheim analyst that said they could make $20 a share. And I was like, man, if they could do that in 2020. But every other analyst thinks they're going to continue to lose money. So I am so torn on this position.
And didn't you listen to an analyst on AMD? You should have listened to that analyst. Remember, you bought it.
Spinner saying, I tried to warn you. Sure. What do I do now, Spinner, though? I'm asking you, what do I do? Do you sell it and eat it? It's hindsight 2020. You can always say I shoulda, coulda, woulda. I never, as a trader, I'm going to tell you one thing. I try not to live in the past. So I try not to when I have a bad trade, I try not to dwell on it and think about it for weeks and weeks try to learn from it and move on. I'm still in this trade, so I need to analyze it. Once I move on, I move on. I eat the loss and move on. So I could say, yeah, obviously I should have taken Spinner's advice and not, or Spinner's, we don't give advice to anyone on the show, and our chat doesn't either. But, Spinner was saying to lay off it. Obviously I should have did that, Spinner, but now I'm still in it. So the question is, I analyzed it differently. I analyzed it incorrectly, at least at that time. But my time horizon on this wasn't a trade. It was a long-term investment. I've done some bad things before too, selling out of, potentially, some of my best investments. I got down 6 or 7% and off the hop. So it's just my overall net. The reason I don't want to add this to my portfolio is because it sticks out like a sore thumb. I have long-term value-oriented stocks, and I got this Tesla thing here that doesn't even look right in there. So, maybe I just wanted to try to find some growth. I think they eventually are going to make money and maybe get some love from there. But right now, the stock is hated.
Okay. It's walk on road. Walk left side safe. Walk right side safe. Walk middle, sooner or later, get squished like grapes.
That's it. I butchered it, but thanks for the save there, Joel.
Thank you to buy Apple here. The Google chat's lighting up here. They're saying sell. Jason Raznick is in. He said he told everyone that it was a risky trade. What else?
What's Jason Raznick doing? Is he still holding on? I need to know Jason Raznick what he's doing.
Okay, he's in the Google chat. He's the
one we need to know because Jason has done Tesla. He was originally buying this thing was like $30. So obviously he's in from a different cost base. But he's still holding strong, or has he been lightening up? Maybe he sold it to me.
He says he sold most of his common, but he still has call.
Oh, yeah, sold some. So he's selling it. We got to get Jason. Jason's a better investor than I am.
He probably sold the stock. He probably said sold to you. But you know what? I'm going to stick with my trading range theory on this. And, I never thought we'd go to the top of the trading range, so quickly with the 388 high, 387.46 on the going private talks. You had a low at 288.20. That was your August low. Also a low at 286. Now I remember trading down like the 282, 283 in the pre-market. So maybe you're just in a trading range here.
Well, you are. You still are. I mean, you look at this thing on the weeklies. Let's look out. You can say, trend, downtrend. There is no trend. In the last 2 years, Tesla has gone absolutely nowhere. 2 years ago, it was $300. Today, it's $300. There is absolutely no trend here. We are still in a full battle between the bulls and the bears here on Tesla. So I look at here and it's not necessarily in a downtrend. It's actually at the bottom of the range. So if you're just range trading this, I would be selling the bottom of the range, which is not the thing you ever want to do. You usually want to, be buying the bottom of the range when things are just basically in range trading. Or what was that the channel or channelingstocks.com? Buy low, sell high, the same stock. Again, remember that kid? He was retired. He was like 30 years old. Remember that commercial, guys? Channelingstocks.com.
I don't know.
I'm selling the bottom of the channel.
Yeah, until it falls out of the channel. Did you go?
Well, that's a problem.
Did you go all in, or did you just was this a dip your toe in the water trade?
No, half position. That's why I said I wasn't convicted. It was a half position.
Okay.
Half position sizing. That's what I do. So when I'm all in, and I will do a double position sizing too. When I feel like I'm very convicted on something and I feel like, okay, I really like this, I will come in harder. Like on Merck and Lilly back in the day, I put double positions on those. Those were fabulous. I bought a double position of Merck back at $32. It was 3 or 4 years ago. Lilly, I bought a double position. I think it might even have been a triple position. I was so convicted on it at $30. It's $105 now. But you want to know on those Merck and Lilly positions? That original Merck position, so this goes to show you, long-term investing and trading are two different animals. On that original Merck position, I bought it like 32. It went down to like 26 on me, and I kind of felt like throwing up. But here I am, and I held on, and I am 6-7 years later, and the thing's at 70, and it was paying me a 6% dividend back then too. So on my original capital basis, I'm still getting that. And Lilly was the same thing. Lilly went against me too. Some of my best long-term investment positions, I took heat on off the bat. And I held through it because I stuck in my long-term account. And I don't know when I started trading my long-term account, because at one point in time, at the trader me, I had never sold a stock in my long-term investment portfolio. I think it was like I started my long-term investment portfolio like 1999. And I think in 2006 or 2007, I had never, ever sold a stock. I had only bought in that portfolio. It was long-term stocks that I believed in. But then, we had the financial crisis after that, and I had some long-term ones that got absolutely annihilated. I was like, well, I'm not doing that anymore. When I feel bad about something, because I watched some stocks that I was way up in. I had some Citibank that I was way up in, and I watched that stock go, obviously, from $55 down to $2. And, so that kind of changed my investment philosophy a little bit. It was like, okay, well, you can't just hold forever. You can't just do all Warren Buffett approach. And even Warren sells sometimes. I talk myself like that way too. But now I feel like I'm trading my investment portfolio somewhat too. And I got to stop doing that, because I'm never going to get these 300, 400, 500% winners if I continue to trade my investment portfolio. So it's the conflict of the trader and an investor. There's two hats I'm putting on all the time, and they conflict with each other a lot. And I'm sure a lot of other traders can relate to this too. I mean, you got to enter the trade saying, what's my time horizon on this? On Tesla, I stuck it in my retirement account. It was a long-term time horizon that I was like, I had been talked into this story. And here I am 3 weeks later, and I'm talking about selling it out because I'm taking heat on. I hate being down in stocks. So, maybe that's a good thing. It's the fear of me of the trader. But sometimes, you got to take a little bit of heat in the long term. It can actually be good that you did that, but I'm just not sure Tesla's a stock to do it on.
Okay, I have an idea. Next time you want to put like a quarter or a half position in something, short it.
Because I'm doing bad on those ones. I should just sell. What was the last one? Oh, Micron, when I bought the high at 60, and everybody had me talk. It was going into 100. I was like, well, I want to participate. Obviously, the investor in me was very not convicted when I bought a third position. I don't even know the last time I bought a third position. That means I'm really not convicted. And I did buy more on Micron at 53, which was bad again. And then I missed my buy at 45. Man, I've just butchered the hell out of that one.
Jason says, Dennis, just shut your eyes and you will be okay. Take it off your screen.
I listen to Jason Raznick on this one, so I'm sticking with Jason for now.
Let's move on. We got the
close my eyes.
How about that move in the old Smith and Wesson on Friday? Huh? Did you get caught trying to short that thing on Friday?
That's again. No, I did not. And the ticker symbol on that, which always messes me up, has changed, and it's
AOBC.
Yeah, I don't know why they want to change ticker symbols and names and everything, but wow, what a move. It just kept going. Like, that was blast off into orbit. And RGR too, we talked about the sympathy play on the show. I tried to buy it off the open. It opened up $1.50, but you know what? If you would have bought the open, it actually opened up, I'm just trying to see what it opened up. It closed the previous day at 61. It opened the next day at 62 1/4. So it opened up $1.25. But if you were paying up for it, you would have been happy you did that, because that opened near the lows and that thing blasted off too, up to 65.45. So that's the pure sympathy play. You can just see, sympathy, how it works there. But AOBC was in rocket ship mode, and it's up here again this morning. And you got some shorts that are absolutely annihilated in this thing. But really, when you put it in perspective, I mean, this was a $30 stock back in 2016. So there's still a lot of people who are underwater there. Let's see what happens here today. It's a big day for it. Can it hold the gains? And can it continue to climb this wall here, or climb up back after being annihilated here for the last year?
This is one thing I just want to point out, because we talk about the pre-market and the after-hours trading and the potential implications for the day. Here's a situation. Let's see if I can grab the pre-market high. Your pre-market high, boom, boom, I think was in the 14, or no, it was in the 13 handle. And then that thing just opened up, just took that. It was off to the races. Looking at, the dailies here. Let me pull up a daily chart. What you want to see on something like this, I don't care about the short interest. I don't care about any of that stuff. What I want to see is follow through the previous day's high and just keep on going. We're trading up 12 cents. Boom, 1404. That's above yesterday's high. Going to your monthly charts here. Boy, oh boy, 1458. I'll give you guys that as a level. That was your high back in December. And then RGR, same thing, sympathy play. You had to be quick off the open. Let's see, that opened 62 and a quarter. You would have taken some heat. It went down to 61.50, but the old oops.
It was quick heat, though.
Quick heat.
It was like in the opening candle, I think.
Yeah.
Yeah, it was all in the opening candle. The opening candle's wild, guys, and this is one thing when you're trading. You almost the opening candle on some of these stocks can be like RGR could have been 50 cents wide, and you're looking and it's just like market orders going and they're knocking it down 50 cents and then it's popping back up. I mean, that's the one downside about trading stocks on the open, especially the smaller caps or the mid caps. They can be really wide off the hop. So it's difficult if you want to get in or out, or if you're on the wrong side, slippage is just huge. The reward, so it's all risk reward. We know that trading is all risk reward, but the reward is huge off the open too, because a lot of times the stocks have their biggest movement in the first 5 minutes. But the risk is also the most too. And I specialize in openings. This is how I make my living, is basically trading the opens, getting on the right side of a trade that might be strong that day, or on the and minimizing the damage from the wrong side. But it can be hard to minimize the damage in the small caps and mid caps. It's probably why I pick on the bigger stocks a little bit more. Like a Bank of America, you can almost always get out of that for a penny or two, even with some size, even in the first opening candle. But on something like RGR, if you're on the wrong side of that and you get in, you can get hurt in a hurry. So you want to make sure, or you want to try to, as most you can, to be on the right side of it. But it was kind of predictable that it was probably going to show some strength. So even if I was in that off the bat and you look like, oh, I'm taking 75 cents of heat, but were you really? I mean, it was just probably just that spread. And I didn't see how it actually was trading. I wasn't watching it. Sometimes I got 30, 40 positions. I can't actually bring them all up and look at the spreads. But I would imagine it just had a wide spread and was probably chopping around a little bit in there before that uptrend really started to take off in the next few minutes. But sometimes you can take some heat, and it's not really heat when the spread's just that wide. That's what I'm trying to say.
Yeah, and if you want to, go. I don't have time to do it here, but if you want to break down, what Dennis is talking about, go to a 1 minute or go to a 2 minute or 5 minutes, and you'll see, especially on the 1 minute, sometimes all that action takes place within the first 30 seconds, minute of trading here. So you got to be quick. Maybe that, if you would have looked away, maybe a better result. S&Ps are climbing back here. We are down 575 at 95 and a quarter. I did mention 91.75. That matched Friday's low and the weekly low, folks, here. So that was actually a Globex low. Your intraday low was a little bit above that. So we'll see what happens. Dennis, before we bring Mr. Chahine on here, I'm going to dial him up. You got any imbalances for us?
Well, let's go take a look. Right hot off the press, they are mixed. So nothing huge. Ford 228,000 to sell. That's had a little bit of a trend going now here. 64,000 to sell. So sell and bounce every single one. Nike we haven't talked about yet. 62,000 to sell. Nike is taking it on the chin. Maybe we can talk about that with Nick.
Yeah.
There is some news here as well, so we'll save it for Nick. But we'll talk that in a minute or two with Nick. Nike 62,000 to sell. Square has just been an absolute monster. It's up here again today. This stock just goes up. It seems like no matter what. It's $89. I think it's going to be a $100 stock eventually here. But if you're buying it now, you're chasing. I think if I wanted to be in this, I think I'd wait for the dip now to get in it, because I don't think it's going to go straight to 100. It's going to be a washout here eventually, but it has just been in monster mode. 40,000 to buy here this morning. Just goes up every day. I do have PayPal, which obviously moves sometimes a little bit in sympathy, but Square is its own animal right now. That's pretty much the only ones jumping out to me this morning.
Well,
let's go grab Nick.
All right. We are going. Hey, Nick. How you doing?
Good. How are you?
Good. Dennis, I still got you? No. Oh, we're going to take a quick break here, folks. All right, welcome back, traders and investors. We got Mr. Chahine on the line. Still working with this new Skype, and I lost Dennis there. So, Dennis, give me a call. We'll add you to the call. Nick, how you doing here? How you doing on this Tuesday morning?
All good. Just trying to get back into the swing of things.
Okay, and did you have a good long weekend?
I did. I tackled a project under my truck, so I feel like a He-Man. Stuff I don't know how to do, and I'm just trying to teach myself.
Yeah, what was that?
Installing hydraulic assist in order to turn the gigantic tires I have on this lifted truck. So something I've never thought I would ever do, but here I am, poking holes and gearboxes and everything.
Okay, well, let's cap the action in the S&P 500. Strong close on Friday, made a nice high. Had a decline here, but we're coming back. Really no specific news here. You have oil trading higher. Why don't you give us your thoughts on the overall market?
Well, it's yesterday the futures were up while they were kind of struggling abroad. So I was like wondering what's going on with the disconnect there. But overall, the markets are at all-time highs. So I just posted a chart of the S&P minis, and the price is going along a line I drew. So it's going to be a few dips here and there. We're just merely testing the neckline from which we broke out. You can't just break out and take off. Maybe you could sometimes, but you need a catalyst for that. And we kind of had one last week with the deals with NAFTA hopes, but I think they kicked the can a little bit until this week, and then they're forward with the Canada part of it. So we shall see. But meanwhile, we're going to meander higher in the absence of new shoes to drop. That is my opinion, and that's where my trades are.
Okay, all right. Let's take a look here at Nike this morning. Boy, oh boy. Now, I don't know who's working in that advertising department there, but they're starting a new ad campaign here.
Yep.
And, with Colin Kaepernick. I mean, holy moly. I mean, is that something you want to do? They're really stepping into the fire here. Talk to us about Nike, fundamentally what you think of it, and then also what it looks like on the charts.
Okay, so Nike would be one of those charts I don't chase up here, but if it falls a lot, I may sell puts against the fears just because it's a global brand. Nobody gives a hoot about American football abroad. So we're 250 million people here versus billions out there. So I don't think it's an issue. I don't like it just from a patriotic standpoint, but I don't think it's an issue. As far as the chart's concerned, it is a constructive chart, but I typically don't migrate towards those unless I know there's a reason why I need to chase it higher, because I tend to sell puts and put spreads into what others fear in order to create income versus trying to chase an upside potential. Unless I have a specific reason to, and I just don't know enough about the fundamentals to do that with Nike at this point. So let them bring it down. Maybe I'll sell some puts against it, but I'm not sure at this point.
Okay, all right, and boy, oh boy, I know you were on the Apple train a while ago, and man, oh man, this thing just keeps on going here, trading up 42 cents at 228.05. It seems. No matter what the market is doing, it just continues to grind higher. Give us your thoughts on Apple.
So at this point, I don't want to chase it, but it does have earnings. So my best guess is it may meander sideways, dip a little bit, but next set of earnings will be another catalyst. Of course, meanwhile, we will have people saying some scary stuff about it. And, this is a company that is just printing money. And I had somebody on Twitter challenge me on, I made a broad statement about being bullish the market. And they kind of said it's all fake because of buyback and all that. And it's like, you can't fake the top line. Okay, so you can affect your earnings per share by changing the number of shares you have maybe. But the top line, the sales, you can't fake it. People love the stuff. Not me, but people love the stuff. And they just keep buying it. And Tim Cook is not the right guy for the company. I've said it and I stand by it. But for now, the company is just too good for him to break.
Guess who I got back here?
You figured it out, Joel. I the Joel call.
Everyone.
I was like,
everyone.
After the first 35 minutes with no technical difficulties, I'm like, I'm going to go along the Joel calls. He's got this thing figured out how to run this show now when Spencer's away. And then I was like, I don't know. Now he hung up on me. So I'm back.
It's that new Skype. You always talk about.
He's got excuses, Nick.
Yeah.
Oh, man.
Hey, where were you? The new Skype came about like a couple of weeks ago, unless you just turned off your computer for the first time in a while.
Actually, I haven't updated yet, so I shouldn't laugh at him because I tried. I updated to the one Skype and then I messed up and I went back, but I don't think you can go back now. And it keeps saying every day I get the message from like Microsoft Skype that you have to update soon because it's not going to be supported anymore. But I'm always one that waits till the last second.
I found a lot of better things on this one than the old one.
So
I don't
like
this one. I like it better than the old one. It's still antiquated to me, but
all right, let's keep it going with stocks here. We got Triple D back. BC Tokyo wants to know if you have any thoughts on a potential or current Netflix Apple war.
Netflix Apple war.
Yeah.
Well, Netflix, everybody's chasing it. I hated the stock earlier. I hated the idea of it, the fundamentals, how they're spending so much money. But for now, it seems to be working. Everybody I know has Netflix, including my in-laws. I don't, but I get the stuff for free on my iPhone. I mean, on my Android for some reason. But anyway, so it's working. I wouldn't sell Netflix because Apple is on its heels. I think there are other companies that are at its heels, but they are creating content that is exciting. I just saw a cartoon of sorts coming out.
They hired somebody. They're starting to focus on that area too. I saw it go by my timeline there. They hired some big like cartoonist or whatever to.
But so far, my impression is that everybody is an adult that likes it, or at least a young adult in college. But now, if they're biting into the kids, boy, that's a lot of money there. So I wouldn't short it. I am long it via things here and there, and I wouldn't mind risking money on the price action and the hopium that it has. Like I said before, the trend for Netflix the thesis for Netflix is long dated, so you can't just poo-poo it right now. I'll post a chart, and price action was almost exactly as we expected, and I sold puts and put spreads into it, and they paid because it traced the price traced almost exactly like we expected it. So I draw these lines and I place trades against them, and the important part is to know when to get out. So like I did one, if you did one and then price goes against you and then your thesis is kind of broken, you know that you need to get out. So there was another trade shorter term that happened last week. So that paid too. So one leads to another. You just have to trade the price that you're seeing in front of you, regardless of how convicted you are one way or another.
Two things about Netflix I just want before you move on. One is I watched Ozark, so I agree with your content stuff that they've got. I watched 3 episodes of the Ozark. The new season just came out over Labor Day weekend. Excellent so far. I mean, that's a Netflix original. They've got some good shows. Second thing is it's still got the story. And when I was saying last week, I got my little thing written down. The story matters more than fundamentals or technicals always. You got a good story and the stock will rally. And the story, I think, is still intact here. So that's why I agree with you, Nick. I think it's hard to short it because it's got a good story. Eventually, maybe, somebody comes out with a better story. Maybe the competition comes, and then the valuation will come in. But I'll tell you right now, like you said, everybody has a Netflix account. It's still got the story. It's still got the buzz. And that's why I think it's hard to be short the stock.
Yeah, I definitely would not short. If you short it, then you're shorting the markets in general. And that would be a good idea because momentum stocks run faster up and down. Like Amazon, Netflix, all these guys have a lot of froth. So last week, you saw a few stocks like Tesla had already shed a lot of froth, and then we had something, I can't remember what it was, but I was watching the screen and something came out, everything just dipped, and just Tesla didn't even budge because it was dipped already the whole week. So these are frothy, they will run fast up and down.
Do some counseling here for Dennis, who's long Nike hire. I know you.
No, Tesla.
Tesla. I'm sorry. Tesla. I'm sorry. I'm looking at a couple different things here. Dennis is.
I want to be out.
He wants to be out.
I want to be out before I bought it. So just quick up, and I don't want the whole show to be about my Tesla position.
Wait. When
I
did
bought
you
this
get
in my
in?
long-term retirement account. I had the story thinking, well, if they've done this well and they've really gone nowhere in the last 2 years being not profitable, what's going to happen when they start being profitable? So I put a half-size position in my retirement account. And I said I wasn't going to look at it. Here I am 3 weeks later. I want to sell it because I'm down.
Okay, so 3 weeks, you said?
It's been 3 weeks. I'm down 7% of the position, and I never really wanted it in the beginning, but I talked myself into it somehow in the long-term investment position, mainly because my main argument was it's held up well in this whole time that the stock has been burning cash. And they're getting to a point where I think they're going to be profitable next year. And I'm like, when this thing starts turning a profit, the stock could eventually take out. That was my thesis. Okay,
so I made money long Tesla by selling puts when it fell hard. I got like $16 for selling January 195, and then I closed some at 10 ish. So I'm still holding a few. So my idea is if I'm long from 3 weeks ago, it's almost too late to get out here. I want to see what happens at the ledge I just posted before today's open. So last time it dipped to 280 something. So that would be my exit point. And before that, there was also a hard test at 275. So this is kind of a neckline where I decide, because now you have a wedge of sorts. So you have lower high, sharp lower high trend that's butting up against proven support. So if the support holds, that trend line is going to break upwards. So if the market allows it. But again, this is a frothy stock, very, very frothy stock. And if the market's correct, this one would also correct very hard. So I'm not too stubborn in my longs, so I would definitely protect them. But it's almost too late to get out here before seeing what's going to happen.
I'm selling. Yeah, we need more information, really, is what you're saying.
Yep. I would let the price action tell me what's going to go on. So I would look for that 280 plus or minus $5 or $3.
Yeah, you almost got to give it now at this point in time when you're down this far in it. Like the 273 was the low in May. I mean, it starts to breach that, and then that's the lows, that we've seen. Obviously, 250s. If
it's a decent size risk, I would protect it by buying a few shorter days.
It's a half position. It's not even a big position because I wasn't convicted. And I jokingly was saying, it seems like whenever I do a half position that I'm not very convicted, I should maybe just stop doing that. Buy or don't buy. And we did the whole Mr. Miyagi thing, cross the road kind of, and you get hit by a car. So I think I probably should just stop doing the half.
Okay, so you
be convicted or don't be convicted.
But you said something about them turning a profit. I think that's the big leg up or down. And there's rumors out there, and I've seen it and I've read it. It's not my information. I'm not breaking anything new, that they're jiggering what they're delivering and how much they're working their people. So they'd rather fall short on the deliveries of Model 3s to actually deliver the profitable ones. So if that's the case, then he's focused on turning a profit, and that's a statement that I think will move the stock big time up or down next time around.
All right, Nick, let's move on here to the gold market. I know you've been I gotta mention it, Nick. Talk about your winners.
I'm holding puts.
You got the hopium? You got the hopium trade on, Nick?
No, it's a fundamental trade. What are you talking about, hopium? It's gold, man. It's gold.
All right. So tell us what you're looking for.
Yeah, I am long gold via some credit put spreads and a few calls, and that has been a difficult trade to manage. But I also did buy some puts because I did see some stuff I didn't like in the price action. So for the short term, let it fall. And I have greens against my longs. So this is kind of hedging my bet to buy time in order to see what the heck is going on. The dollar is killing it. It's still super strong. And careful what you wish for with the dollar, because if they say if the dollar breaks really hard, it's probably because Draghi is going to say something about starting to raise rates on his end, and that'll change the picture completely, because I think the bond market will have a huge dizzy with that statement. So I kind of okay with the gold trade where it is right now.
Okay, let's move on to the financials here. I saw, I don't know if I read it or saw it, that fund managers have kind of been lightening up on the financials here. Haven't got the raises, the abrupt raises in interest rates. I think we're still getting a couple moves here. Just sitting still, probably XLF is good for you if you're short the premium. Tell us what you're looking at in the financials.
I made my money in the financials by selling downside puts against when everybody had fears earlier this year. Like that one day they were down 4%. And I was like, that was like Christmas for me. Right here, it's mid-range of this year's price. So it has upside potential. I lost a little bit of money trying to game some calls, but I'm still holding them. But they're not exciting because I thought they were going to break out, even though I kind of felt that they weren't. So it was not a big position. It was just a test of price action. They are value as far as they're selling at really low PEs or low booked, but it's markets are at all-time highs and the financials are right here. So there's more downside risk than upside potential. So I'm okay selling against that downside risk, but I'm not putting a lot of money chasing the upside.
Okay, and any comments on the oil market here? Up $1.43. The October futures trading at 71.23. Some rumors of some rigs coming offline. Iran chat. I mean, not a lot of resistance here. Give us your thoughts on the crude oil market.
So the crude oil market, I sent out a note saying don't be short oil last week or last couple of weeks. I don't remember exactly when, because I saw a lower high trend and a higher low and it was kind of getting pinched, and I thought upside potential was going to come, and it did deliver. I just don't believe it's worth that much. I think it's literally a rigged market. You have OPEC. That's the only reason they exist, is to manipulate supply, demand, price, everything, to make sure everything is working according to plan. And don't ever believe what they say. You listen to their words. They're just and then translate it into price action. That's their words. Goal is only to drive price up or down based on what they needed at that point. So I don't trade oil much, except sell risk against Exxon and Chevron when I think they're low enough, and I just don't need to be in those right now. So they're on the sideline for me.
Okay. All right. Any final comments here, Nick? We're going to let you go after this. It's a short week, so got to watch your premiums. You got the holiday next week. Any tips?
Sure. Short weeks. I've always said, everybody says, well, how can I scalp some erosion? I have yet to see a short week that didn't have drama. So it seems like they bring their own drama somehow. I'm not sure why, but I tend to avoid selling risk into short weeks. Having said that, I am short some IWM puts, but that was a roll from last week. I won 2 weeks in a row. I just said I'm going to roll it one more week. So I do have a little bit of wiggle, but if we correct a little bit this week, I might be under pressure on some IWM credit put spreads. But I'm also short the RUT credit call spreads, about 100 points above here. So my book is in balance. So that's the point. Stay in balance. Don't be overweight one way or another. And don't be afraid to book some profits here and there or losses early. So
we've been on the line with Nic Chahine. He's the author of Create Income with Option Spreads. Joins the show every Tuesday. Nick, we got you. Lost Dennis for a little bit, but a quick recovery by me. So thanks a lot for coming on. We'll talk to you again soon.
Looking forward to it. Thanks.
All right. S&P futures holding steady here, down 5 points at 28.97. Let me reiterate your pre-market low, 28.91.75. That matches last week's low. Nike continues to get thrashed here, down 262. I don't know what they were thinking there on Nike here, but Nike continues.
I like Nick's comments, though. I mean, is this a global issue here for Nike, or is this a U.S. issue? Because you're taking the stock down 3% here, and stock has been performing very well. I think I'm a buyer of this dip, too. He was saying he might rate some puts, and I don't know where you're coming in. Maybe you step in at the 79.12 low from the 15th. Maybe it's got more gas, but I feel like this is one that could bounce potentially back here. I don't think they continue to slaughter it on this. So I think this is overdone, too. I like it at the lower 79s. I'm a buy the dipper on Nike.
Buy the dipper on Nike.
I am. That's my opinion.
Okay, but what about the dip in Facebook here, who received a downgrade from Moffett-Nathanson, downgraded from buy to neutral? Boy, oh boy, this stock has really been here in a trading range. Dennis, give us your thoughts on.
I mean, Facebook, I have it on my long-term investment account, a half position again. So there I am, not very convicted. I'm actually slightly down in this thing now. I think about 176, and obviously wasn't fully convicted when I only buy the half position. Sticking with it. Only thing, though, it has not responded. I don't like it that much, to be honest with you, from a trading perspective there. I'm not nervous about it like I am with the Tesla position, though. I think it's going to retest the lows of the move, which was 166.56. I think we're eventually retesting that. I mean, we didn't really rally. We had in the recent tech rally where everything was going up. Facebook did not respond well. So relative strength is horrible here. I think actually Facebook has more work to do on the downside. Here I am talking against my book again. But the only person on the street I think that does that. But I think Facebook is going down further here to test those lows.
Boy, I tell you, it did not get much of a bounce off that earnings low. And I'm kind of busy here. I can't work your numbers, but even
it did bounce. It did bounce, but it gave it back quickly.
But what's the 50% there? Oh my gosh, I got to do it. You had a low of what's called 167. You had a high of 188, so it's at 21, 10.5. Man, this 177.5, 178 level, you don't get a
all kinds of resistance.
Oh my lord! Or call it just 180. That recent high, your 2-day high at 79.79. No, I see no upside here for Facebook until you can clear that.
It's an ugly chart.
Yeah, very.
You're buying ugliness. And speaking of ugliness, Matt and Beyond wants to know about EA. This one is ugly too. This is on my list as well. I am interested in this one as a longer-term investment there, but it is going straight down and has given me no reason to try to catch this falling knife as of yet. So we said 115. It's now breached 115. When it was 121, I said I think it could trade 115. It's already now below that, 113. Now you start looking, well, you're probably going to want to go 110. The low back in October 2017 was $99.63. I don't think it's going to get that far, but this is on my shopping list. I will say that. And when I start to see a green candle, start to see some life here, because I think the esports thing is for real. Video games are not going away. This is one of the ways to play it. So this is an opportunity to get in. I think when I look at this 2 years from now, it's going to be back, not even 2 years from now, a year from now, I think the stock could get a lot of its losses back. So I am interested, but I see no reason to try to catch the falling knife. Let's wait till we get a green candle. But definitely on the shopping list, EA.
Well, it had the the unfortunate event that took place at Jacksonville. That was a horrible event. And then this is something that you don't see a lot very often. It was a cover of Barron's, and you talk about the Barron's jinx, and they actually took a good part of their column here. In that
this week it's cover Barron's?
No, last week.
Oh, last
week. And then
week.
they just came out and they defended themselves on it, and they took a special blurb on it and to talk about it. But you're right, man. It needs to stop going down first. So trading up a little bit in the pre-market, wait for double bottom, triple bottom to come about in that. All right, Dennis, we did not get to the rest of our ratings, and we didn't.
There's a lot of ratings.
Yeah, a lot of ratings.
Let me just fly through them here. We'll stick for a minute. We'll fly through. We're not going to do any charts. We're just going to tell you. Qualcomm upgraded Macquarie, Twilio, TWLO upgraded at Key Bank, UPS upgraded at RJ, WDC and STX downgraded at Evercore, Signet downgraded to sell at Citigroup. So they are fading last week's pop, and I tell you, last week's pop has faded fast in Signet Jewelers. It goes to show you when you got these stocks in eternal downtrends and they get these huge lifts there, they don't last long. And Signet Jewelers quietly has already given back 10 points. It was $71, giving back 61. It's giving back 2/3 of the gain already. So it was up 30%. It's given back 2/3 of it in 2 days. So again, chasing these things in downtrends is never a good idea. Selling the rips in the stocks that are in overall downtrends. And if you look at a 3-month chart, you can say, what am I talking about? But bring up a longer term chart and you'll see the trend. Go at the monthlies, and this thing was $150. The stock has still got issues there. I think jewelry stores long term have still still have issues as well. SIG, not something that's everybody is buying here this morning. Citi downgrades it to sell. Verizon downgrade at Barclays. That's taking a little bit of heat here this morning. Roku is a new buy at Guggenheim. Roku is the one that's got some momentum too. I mean, this would not be an investment thing for me. It's really kind of ran a long ways here, but could get some lift here. It's up $1 here this morning, and people like this one. It's still a story stock, and like I said, story matters more than anything sometimes.
All right, we're going to wrap things up. We'll be back tomorrow with Spencer. Man, I think I have to give myself a B- on the show.
You would have got an A+ if you wouldn't have lost me.
I lost you, and
people get sick of me talking anyways, though. So
yeah,
maybe
just like the ad call, this new Skype. I practice it, over the weekend. So I'm sorry about that, folks. But 9:02, we'll let you get ready for the open. We'll be back with you tomorrow.